I invested $11,000 in SCHG and then $24,000 in QQQM. Here's my ETF investing results for the best growth ETFs. Charles Schwab's SCHG is up over 720% all time. The NASDAQ 100, which is the index that QQQM tracks, is up over 120% all time. And then when you put both of these technology and growth ETFs on the same chart, they are about neck and neck, with SCHG coming out on top and winning. And this is over the last 3 years of performance. Now, I feel like everybody is going crazy and just bonkers for these two amazing growth and even technology ETFs. Now, they're some of the best, and the first one's going to be SCHG, Charles Schwab's US Large Cap Growth ETF. Even QQQM is up there as well, and Invesco's NASDAQ 100 ETF, which is more of a technology-focused ETF that has growth traits of a typical growth ETF as well. I've realized that nobody even talks about how much money they've made or lost or what it's like investing in these highly volatile ETFs, because it's pretty volatile and pretty risky, but I did for you guys. So in this video, I'm going to review both SCHG and even QQQM, as they are amazing ETFs for investors. I'll even go over how much money I've made or even lost, my experience of investing in these ETFs, who should invest in them, the pros and the cons, the risks and the reward, and so much more, even the dividends. It's all jam-packed in this video. So let's get started. Okay, let's begin with exactly how much money I invested in SCHG, and that's all going to be from Vanguard, which is my preferred investing app of choice. Drum roll please, because I invested exactly $11,416.36 in SCHG. The result, well, after investing $11,000 in SCHG, I'm actually up money and in the green and in a profitable territory where this ETF is very volatile. Even during the ups and the downs, I'm still up money because I'm always dollar cost averaging in this ETF no matter what happens in the stock market. My total returns, factoring in both dividends and even capital appreciation, is $575.93 in SCHG. And know that I've been investing in this ETF for a little over 1 year in my Roth IRA. Moving on is my SCHG dividend income. You should know, please know this, that both QQQM and even SCHG have low dividend yields. Reason why is because the companies in these ETFs reinvest their profits back into their business to hopefully grow the business and grow the revenues, versus distributing those profits back to investors in the form of a higher dividend. The result is going to be a lower dividend yield, which is a good thing and a bad thing. Bad if you want income, but good if you want some good capital appreciation and growth potential, hopefully in the future, from more R&D, which can generate more profits, more revenues. You get the point. Over the last year of investing in SCHG, I received a total of 4 dividend payments from this ETF, where my first dividend paycheck was a very small dividend of exactly $2.24. My next dividend payment the following quarter increased barely to $5.39. Then my third dividend paycheck was $7.56. And finally, my highest SCHG dividend payment was $9.56, all in that sweet, juicy passive income. Yep, a whopping $24.75 in total dividends from SCHG. And please keep in mind that this ETF's dividend yield is going to be pretty low at 0.43%. Now, SCHG is an amazing growth ETF, and I like it so much that it's the highest holding in my Roth IRA by a huge long shot. So yes, I'm very bullish on this ETF. I think it's a high quality fund, and I plan to invest in this one ETF for the next 35 years. Reason why is because in my Roth IRA, by the time I retire and take tax-free dividends and tax-free capital gains, that will be 35 years from now, because I'm just 24 years old, which is a quite long journey. And with this ETF of SCHG, you invest in high quality growth companies in a very cost-effective manner at just a 0.04% expense ratio. You also get exposure to some of the best growth and even tech stocks in the entire world. And then also you invest in other sectors that aren't technology focused only, like communication services, consumer discretionary, healthcare, financials, and even industrials, for broad diversification in just one ETF. And then with this diversification, you can even lower your risk tolerance and even lower your exposure of risk, because you aren't just investing in 100% technology stocks like other ETFs like VGT, FTech, XLK, and even SMH. So SCHG is less risky and less of a risk to investors because you have other sectors in the stock market. The main selling point of SCHG, and even why I invested in it, is because you have exposure to two exchanges. You have the first exchange of the New York Stock Exchange, or the NYSE, and you also have the NASDAQ Stock Exchange, or the NASDAQ, which is great for diversification, and I'll explain why right now. For example, QQQM only, and the key is only, QQQM only invests in stocks from the NASDAQ Stock Exchange or the NASDAQ. So if there's other great growth or even tech stocks from the NYSE, and then the NYSE is the New York Stock Exchange, you're going to be out of luck because QQQM won't invest in those other great companies from the NYSE. However, SCHG is not limited to only the NASDAQ Stock Exchange or just the NASDAQ, which is a great benefit. This ETF will happily hold and invest in other great companies from the New York Stock Exchange or the NYSE, and not just the NASDAQ. As a result, this can then lower your risk, I repeat, lower your risk to investing in just one exchange. And of course, potentially adding more diversification and even more long-term growth in your portfolio, which are great benefits of this ETF of SCHG, and is the main reason why I love investing in SCHG for my long-term investing needs. Okay, let's see what happened when I invested $24,000 in QQQM, which is a lot of money for me at least. I have been investing in the NASDAQ 100 for quite a while now, but I made the switch from QQQ to QQQM. I'll get to that in a minute, so let's get started right now. As of right now, I invested exactly $24,158.62 in QQQM in my taxable account with Vanguard. So before I invested in QQQM, I actually invested in just QQQ because I was maybe uninformed. Now, the reason for the switch is because QQQM is the exact same thing as QQQ with a lower expense ratio. So with QQQM, I saved 25% on my expense ratio for lower fees so I could have more money to invest in this ETF versus QQQ, just QQQ. So yes, I would prefer anybody to invest in just QQQM over QQQ all day of the week. Also, I want to say that with QQQ, before I made the switch, I had a $4,000, it was like $4,219 in profit, legit profit. I realized that gain in that ETF. So then I had to sell all my shares, sell it all to make the switch to QQQM. And then when that happened, I had to pay so much taxes on all that gain. And then I had to just suck up the taxes and forget about it because now I'm only investing in QQQM. So just know that if you make the switch, to take into account capital gains tax, because that can definitely eat into your total returns and just your stress in your life. But it was worth it. I love QQQM more than QQQ, and I think it's a better option for investors with a lower expense ratio. It's the exact same thing, same index, same stocks, and you also have a lower share price, which is also pretty cool as well. So I love QQQM. So yes, I made profit with just QQQ. Now, when I made the switch, I just invested all that profit in total balance into QQQM. And the result is that I am up money and still in the green and in a profit territory with QQQM, despite selling and switching up from QQQ to QQQM. And despite the volatility in the market, I'm still up because I'm always DCAing in this ETF. Despite the ups, the downs, I am in the green with QQQM. My total returns factoring in both the dividends and capital appreciation for only QQQM is $2,685.60 in QQQM. I would have made like $7,000 in profit by now if I just had all that money in QQQM, but it's a newer fund and back then I don't think it was released, which is okay. But yes, I made money both in QQQ and now I'm in profitable territory in QQQM. And no, I'm not going to sell my shares. I'm not going to sell this ETF for 35 years, 40 years, a while now. I'm not going to sell QQQM at all. So yeah. Next up is my QQQM dividend income. Now I'm going to reveal my last 4 dividend payments from this one ETF. And yes, I've been investing in QQQM way longer than SCHG. So please keep that in mind. I've been investing in QQQM for like, I want to say 2 years now. And yes, QQQM has a lower dividend yield as well, or a low dividend yield, but it actually is higher than SCHG at just 0.62% for its dividend yield. Despite a low dividend yield, I still have a pretty solid dividend for my first dividend payment, or at least my most recent 24th back dividend payment of exactly $18.92. And please just always reinvest your dividends. It's a great hack and just trick to always increase your returns and even have a better dividend snowball in the future if you want more dividends and even a better total return. My next dividend payment was $26.76, so quite a nice jump. My third dividend paycheck was $29.91, and then my highest and most recent QQQM dividend was $33.52, making my total dividends from this one ETF exactly $109.11 from only my last 4 dividend payments, so please keep that in mind. QQQM is not, I repeat, not a true growth ETF. It's more of a tech-focused fund that also has other sectors for more diversification like consumer discretionary, healthcare, industrials, and even telecom. The main selling point of QQQM is that you get exposure to cutting-edge technology stocks like AI and even innovative companies and so much more in the tech sector, especially its historical outperformance of beating the legendary index of the S&P 500 by beating this index by a super and very wide margin and even having so much high growth potential. Of course, SCHG has also heavily outperformed this index of the S&P 500 by a very wide margin as well. I would also like to add that if you want to invest in SCHG and even QQQM, it's for investors who are looking for capital appreciation and growth potential rather than current dividend income, so keep that in mind. So who should even invest in both SCHG or even QQQM? Great question, I'll answer it right now. So let's all break it down. If you have a high risk tolerance, a long time horizon, you could stomach volatility because these ETFs will go up and down very, very fast and very rapidly. You don't care about dividends, you don't want dividend income, you want capital appreciation, total returns, and even growth potential. And then a long time horizon, you could be younger, you could be older, but if you have a long time horizon of at least 5 years of investing, preferably a decade or 10 plus years, I don't see why you can't invest in this ETF, and that's all for those investors who want to invest in these 2 ETFs or even growth or even tech funds as well. Some of you guys might be saying stuff like, Marcos, these aren't that risky, these aren't that volatile, you are tripping, and I'm gonna show you why these are risky and why these are very volatile and high beta like ETFs right now on my Vanguard app. So as you can see, this ETF has very volatile because you can see my personal investment returns that I've lost like negative $1,600 in like a month, negative 500, negative 400. And then all that red is because the market goes down. And then I lost all that money unrealized, which is okay. And then as you can see in stuff like January of this year, I'm up over $3,600 in QQQM. In March of this year, I'm actually lost, $3,000 right there. And then negative $1,600 in that month, which is killer. So I could be up 4,000 and then blink of an eye 1 month, I could be down from that high of about 3,000. And then we have SCHG, which is my top holding in my Roth IRA. Now, as you can see, I've been investing heavily in this ETF in my Roth IRA from $1,000 back last year, and then 2,000, 3,000, 4,000, 5,000, 6, 7, 8, 9, 10, and now $11,000. I've just been investing so much money in this ETF because I'm so bullish on it and I love it so much, especially in my Roth IRA. Even with less money, this ETF is still volatile and my money can fluctuate very rapidly. In 1 month, like in March of this year, I could lose all my gains and just be negative $600 in this ETF. But I'm in the green because I'm just holding and being smart with my money, just holding it, buying it because I'm a long-term investor. First of all, QQQM has a higher tech concentration. So if you like tech stocks, this can be your friend for a tech-focused fund. The NASDAQ 100 has posted higher growth and even higher returns long-term, or even in the past than SCHG, given the long historical trend of this amazing index. And finally, QQQM is going to be more risky, so a higher risk and more volatile than SCHG. Reason why, well, good question, is because QQQM is more concentrated to tech exposure more than SCHG. And then QQQM only has 100 different holdings from only the NASDAQ exchange or the NASDAQ 100 index. Charles Schwab's SCHG is going to be, on the other hand, more diversified and have a less risk exposure than QQQM. Reason being is because SCHG has a broader range of more sector allocations than QQQM and even has more holdings than QQQM of over 200 different growth companies. This ETF also has a lower expense ratio to save so much money on fees. And also SCHG also has higher total returns than the Nasdaq 100 index in the last 1 year, 3 year, and even in the last 5 years as well. You know, and I should know by now, that SCHG can also invest in stocks from 2 exchanges and not just 1 exchange of the Nasdaq and even the New York Stock Exchange. So it's also an added benefit to have less concentration to just 1 stock exchange. Now, in my opinion, I like both of these ETFs. It's super hard to choose just one. I like both so much, but SCHG is the winner and slightly better than just QQQM in my opinion. So yes, SCHG is going to be better long-term in my opinion than QQQM and even a better fund overall, just in my opinion. Now, yes, despite SCHG being my winner, I have more money invested in QQQM, but as you can see, I'm investing more money, hopefully in SCHG over time, to have SCHG as my top holding for my growth ETF allocation in my portfolio. So QQQM is in my taxable account, and then SCHG is in my Roth IRA account. Now give me like 3 or maybe 4 years, and you'll see, hopefully, that SCHG is going to be at the highest allocation on the growth side than QQQM, but I'm going to still be buying both of these ETFs. No matter what happens, I'll be a buyer of both of these funds. Now, of course, there's going to be fund overlap, which is not the enemy and not super bad and not the worst thing that's going to happen. The world's not going to fall apart. We're not going to be, explosions and chaos and whatnot. It's not going to be that bad to have just some fund overlap, unless you're buying like maybe View and SPLG. That's a big no-no in my opinion. Now, can I just invest in one? Probably. Can I just invest in both? Yes, probably as well. Reason why I don't invest in just one is because in any moment, in any time, QQQM can have better performance than SCHG and vice versa. SCHG can have higher performance than QQQM at any moment, at any time period, and any time as well. Now, I have 3 different accounts. I have a 401k, I have a Roth IRA, and I have a taxable account. So I'm not married and not shackled to just investing in one ETF or even the same funds for all 3 accounts. I can have different goals, different preferences for each account that I have in my own money and in my own opinion as well. Now, if QQQM goes up higher than SCHG in 1 year, great. Vice versa, if SCHG goes up higher than QQQM, great as well. Of course, if you want to see my whole ETF portfolio, even when I buy both SCHG and even QQQM, you can see it for completely free on the Blossom app. Yes, on Blossom is a free app. You can see my whole entire portfolio and even exactly the exact price and time I buy both SCHG and even QQQM in my whole entire portfolio. Check out the link in the description of this video or in the pinned comment section, and I will see you there on Blossom. Now, if you guys like this video, please give it a like because this cute puppy did. Now, if you want to see the best growth ETFs ranked, 25 of them, I did that in this video. So go ahead and check out that video. I love you guys so much. Crush in the stock market and take it easy. Peace.